Good afternoon, class. So I'll be discussing the economics portion from the prelims paper. So how was it? मुश्किल लोग क्यों लगा? You said it's difficult. What? Easy, tough? Medium. What was the tough part? Medium क्यों? Okay, what was the difference this year paper from the previous years? Any noticeable change? Concepts on the tougher side. Anything else? So if you see, compared to the previous years, the questions appeared difficult because they had combined a lot of concepts in one question. If you see in the previous years, conceptual questions, they mostly asked A, B, C, D, or they've at max given 2 statements. This year, there were 3 statements given, each testing the concepts. Trend-wise, the paper was on the similar lines. We had conceptual questions, applied questions from your current affairs. A lot of questions happening in the current affairs were directly picked, and certain applied things from those current affairs. One noticeable change which we have seen in the previous 2 years, the mains part of the syllabus has been missing. For example, Indian agriculture. Indian agriculture, they used to ask a lot of questions on the pricing policy, MSP related questions, sugarcane, certain patterns. Those have been missing. Similarly, land reforms. These questions were asked in 2017, 18, also in 19. But 21, 22, both years, most of the questions, they're focused on the conceptual areas. If you see out of the 14, 15 odd questions, 10, 11 questions are directly based on concepts. And why it appeared difficult? Because puri energy lagani hai question padne mein. It's not something that you just read the question, it is a sitter. RBI manages inflation, take D, move ahead. You have to consciously read the statements, you have to find reasons. Why it was not that difficult, appeared to be difficult, because elimination scope was there. In a lot of questions, if you were able to solve one question, this portion, economics, is one area in this year's paper where you had a lot of scope for elimination. Rest, you've seen 2 pairs, 3 pairs. They've not done that in economics. Now, if that would have been the case, the questions would have been very difficult, because you would have to know all the 3 statements independently whether they are right or wrong. But mostly, as I said, out of the 15, 16 odd questions, 11, 12 questions were based on concepts. You revise your concepts and you practice them. This is the only way to solve economics. It's not something which was beyond the sources you've been reading, basic sources. The only thing that mattered here was how much you've practiced. You know the concept of depreciation, you know the concept of inflation. But what was the point here? That you've practiced those questions, you know what will happen. And why I say practice? Because you've seen from the previous years itself, this year also, the paper has been like very lengthy, very exhaustive. So you don't have time to come and revisit the question again. For example, if you're solving a question on, say, depreciation or inflation, if you formed a concept of you're trying to revise, wo dobara aake ab revisit, you cannot do it. You won't have time because the question is very lengthy. It's not just that if there's depreciation, RBI will do A, B, C, D. वो एक statement है, then you have to make the whole concept and again for all 3 statements. So be attentive. If you practice well, it'll be easy to solve the questions in one go. But overall, economics, moderately tough, appeared tough because you had to keep all your focus and then solve the question. Rest we'll see with the questions. So the first question, rapid financing instrument and rapid credit facility are related to provisions of lending by which one of the following? How many of you attempted this question? One only. 2. You got it right? So there are few basic things when you prepare for UPSC. International institutions mein, there are certain institutions which you have to prepare. These 3 are must. And there are certain new institutions also, older ones, but related to current affairs in any of the developments has been happening for these. Like recently G20 pe also they've been asking a lot of questions. So this is something which you prepare as part of your static syllabus. Something related to this in the current affairs automatically becomes important. There's a recent, for example, in yesterday's newspaper, there's a global economic prospects report by the World Bank. All these questions have been asked by UPSC in the previous years. So these bodies, any development happening. Now, rapid financing instrument, this was in news throughout the last year. We had a crisis in, बहुत debates आई कि इंडिया में कब होगा ऐसा. Everybody was comparing the Sri Lankan scenario with the Indian scenario. So you knew certain crisis was happening in Sri Lanka. There were a lot of bodies which were helping Sri Lanka in that. One of the major problems which Sri Lanka was facing was on the maintaining their balance of payment. Foreign exchange reserves khatam ho rahe the. They also defaulted on their debt. One of the bodies helping them, the role of IMF is to help them tackle the balance of payment issues. One of the instruments is this rapid financing instrument. Rapid credit facility, another related term. This is also like a emergency loan given to low income countries. So this term was in news, and again, international institutions, all these are important, which you have to do. Inka koi bhi current development hota becomes important for the exam. If you see the previous trend from 2012 onwards, every year there has been a question on these bodies. Starting from 12, you'll see any publication of World Bank, publications of IMF, certain terms or certain concepts related to WTO. वो publications वाला कोटा खत्म हो गए, reports सब हो गए. So certain new things, for example, rapid financing instrument, the answer is International Monetary Fund. This is the news. In fact, if you see 30th May के दो news से question है. One was this, and the other was the G20 Common Framework. Otherwise, also in the previous 1 year, this rapid financing instrument has been in news, given in PTI, PIB also. Hindu directly picked up from there. Sri Lanka hoping for a rapid financing instrument facility as well as extended fund facility from the IMF. Nothing to be shocked. The Hindu, if you're reading the Indian Express also, it has also covered that. World Bank providing aid to 700 million to crisis aid. Part of it, that Sri Lanka is hoping for a rapid finance instrument from the IMF, including the extended fund facility. Source is PTA, तो ये सब न्यूज़पेपर्स ने दिया है. हाँ? See, these logics you should eliminate. You have to prepare for mains also. In logic के एक महीने पहले newspaper पढ़ना, it's not them, and this is not something which they have asked for the first time. This is one news which I have picked up and given you. पूरे साल में this, whenever the crisis hit, this was demanded rapid financing facility because the situation was deteriorating rapidly in Sri Lanka. It's not that कि एक महीने पहले newspaper पढ़ना बंद कर दें. You want to cut down on your sources to study, and then जब paper आता है कहाँ से आ गया? Anyhow, you have to prepare for mains, right? I'll show you G20 Common Framework also. वो भी 30th में कोई पूछा. Okay, so the next is with respect to the Indian economy, consider the following statement. Now, this is a slightly tougher question. Reference to the Indian economy, consider the following statements. There's a concept called near and rear. How many of you attempted this question? How many? None. Did you get it correct? Marked B, and the answer is not B. Okay, so basically when you compare one is your nominal exchange rate. How much $1 is costing in the economy? When you compare the value of rupee with a basket of currency, that is called a nominal effective exchange rate. You're not just comparing it with one currency, for example dollar, you are comparing it with a basket of currencies. Recent changes in January 2021, RBI had made a change in how much currencies it includes. it has now started calculating for a range of 40 currencies. Earlier it was 36 currencies. It removed 8 currencies and added 4 more. So nominal exchange rate, how do they calculate it? It is this is the formula how the nominal exchange rate is calculated. This E is the value of rupee with respect to the IMF, that is the SDR of the IMF. This value is value of the currency, the country which we are doing, again with the value of the SDR. This weight is your how much trade we do with that nation. So for example, and it's a summation 1 to n. For example, 40 countries, it will be a summation for 40 countries. Rupee in terms of SDR, dollar in terms of SDR with respect to the trade which happens between US and India, into rupee, pound with SDR, trade with UK, similarly for 40 countries. The increase indicates the appreciation of rupee. With the base year, if the value is increasing, it means the rupee is gaining in value. An increase in the real effective exchange rate indicates an improvement in trade competitiveness. What's the difference between nominal and real? Nominal? What? And real mein? The basic difference between nominal and real is you account for inflation. Nominal GDP, real GDP, you account for inflation. Nominal exchange rate, real exchange rate, you account for the prices in both the countries, you account for inflation. Now to calculate REER, it's nothing but just accounting for inflation. I is equal to 1 to n. The price indices of the two. It's difficult to know the formulas. You just what we read in basic classes also, we just read the concept of NEER and REER, that it is your exchange rate with a basket of currencies, and this is with your adjusted for inflation. But if you see the third statement, increasing trend in domestic inflation relative to inflation in other countries is likely to cause an increasing divergence between NEER and REER. Now you don't need to know about the concepts of NEER and REER, just know about nominal and real. The difference between nominal and real is inflation. If there is a domestic inflation is more than the outside, so divergence will happen. क्योंकि उन दोनों में difference ही inflation का है. So this statement is correct. So one option you could have eliminated this one. 2 and 3, 1 and 3, 1, 2 and 3. Now when the increase in NEER indicates appreciation and increase in REER indicates improvement in trade competitiveness. If the value of rupee is appreciating, can your trade competitiveness increase? Trade competitiveness कब increase होगी? When your exports are improving. When does this happen? In the case of depreciation. So even again you don't know the formula, ये दोनों उल्टे काम है. इन दोनों में से एक सही है. Increase in REER indicates an improvement in trade competitiveness. Though it's not that simple because you have to account for this. But this is the logic which you could have used in the exam, but फिर भी this question is difficult. Because we read about the concept, we don't read about the movements in NEER and REER. So answer for this is 1 and 3. That is why economics this year was not simple ke aate hi just you mark the questions. It was like properly drink water, have that bite of chocolate, and ab economics. But questions were doable. They appeared difficult on the face of it, but they were doable. Question number 3. This is the easiest question of this paper. With reference to Indian economy, consider the following statements. If inflation is too high, Reserve Bank of India is likely to buy government securities. sell. If inflation is too high, what will happen? If the RBI is buying government securities, they will increase the money supply, and this will lead to inflation and not control. So this statement is, you eliminate one and the joy of elimination. Otherwise also this question is not difficult. If you read the other two statements, वैसे जरूरत नहीं है पढ़ने की, if you get it from the first, but still. Rupee is rapidly depreciating. RBI is likely to sell dollars in the market. Why? The rupee is depreciating, for example, rupees 60 to 70. Why is RBI likely to sell dollars? Control? Inflation of dollars. It needs to increase the supply of dollars to bring the value back. It's based on supply and demand, the market exchange rate. So this is correct. If interest rates in the US or European Union were to fall, that is likely to induce RBI to buy dollars. Why? If the interest rates in USA, they fall, what will happen? You will have foreign inflow in the Indian market. Now what will happen due to the inflow? You will have appreciation. Then why is the RBI likely to induce buy dollars? Appreciation से क्या होता है? If there is a large amount of foreign investors who are investing in the Indian economy, a large inflow of dollars, the rupee value is going to appreciate. What is the problem of high appreciation in a small time? Yes, this is the reason why it wants to control the value of dollars, because appreciation will lead to exports going down. And that is why RBI is going to buy dollars और इसी रुपी को कंट्रोल करने के लिए RBI sells government securities, because when it is selling dollars, this can cause inflation. This is the whole process of sterilization. Sterilization because a large inflow can appreciate the currency, which will hurt your exports. So RBI tries to control this, and they will buy dollars, sell rupee. Now this rupee can cause inflation. That is why they sell government securities and absorb rupee. The whole phenomena of sterilization. This is correct. Answer is 2 and 3. Otherwise, you did not have to go into the details of this. This could have got you the answer. In fact, this third statement related, they've asked a question on capital flight related to this whole concept, increase in interest rates. International institutions with reference to the G20 common framework, consider the following statements. Endorsed by the G20 together with the Paris Club, initiative to support low-income countries with unsustainable debt. A major disturbance in the global economy, COVID-19, जिसकी वजह से a lot of countries, they could not pay their debt. India में, if you remember, there was a moratorium on the loans. आते ही government had announced that you can stop paying the loans for certain time. So similarly, there was a problem. Certain countries were not able to pay their debt because of the shock of COVID-19. So one of the countries which is the major lender, China, it led a framework that we need to have a common framework to make it easier for the countries to service their debt because of the COVID-19 pandemic. They endorsed by G20 together with Paris Club. Why Paris Club was important here? Because Paris Club, India is not a member, even China is not a member. It's a club of countries, creditors, country creditors who have given a lot of debt to the normal low paying or other such countries. So together with the Paris Club, this G20 common framework was endorsed in November 2021. November 2020, 21 May it came in news. Both are correct. Low income countries with unsustainable debt. In fact, May mein dobara bhi this was covered. This is January 28 when one of the first countries debt restructuring started by China and other group of 20s with the help of Paris Club, adopted the common framework in November, bringing China, India and Turkey, which are not the members of Paris clubs, into a coordinated debt restructuring process. First test of G20 debt reduction process. Reading the newspaper, there's no replacement and there's no timeline ke kab se padhna hai. For prelims in May, June, you start with January of previous year. Reuters again, that would be covered in all the newspapers, even if you're reading the Indian Express. So there's no escape कि हम तो Express पढ़ते हैं. Be it Hindu, be it Express. And बिल्कुल basic पूछा गया what is G20 common framework. After COVID-19, Paris Club के साथ G20 for low income countries to repay their debt, restructuring of the debt. Question number 5. Which of the, with reference to the Indian economy, what are the advantages of inflation index bonds? How many of you attempted this question? One. You've not attempted economics? You've not appeared for it. Okay. Government can reduce the coupon rates on its borrowing by the way of inflation index bonds. Inflation index bonds provide protection to the investors from uncertainty regarding inflation. The interest received as well as capital gains are not taxable. So let's pick out the easiest. The name itself, inflation indexed. Protection to the investors from uncertainty regarding inflation. So 2 is definitely correct. Sorry. You eliminate one option. Now what exactly happens in inflation index bonds? What's different? How do they protect against inflation? Normal bonds, you have a bond price, you have the interest rate, that is the coupon rate on the bond. Isme the difference is the interest rate, the coupon rate which you get on the bond is adjusted for inflation. Whatever the inflation will be in the market, your returns will be saved. For example, in a normal bond, for example, you're getting 2% on a 100 rupee bond. You're getting 2% coupon rate. So at maturity, you are going to get 102 rupees. If the inflation is 5%, automatically you are getting lesser value. But here you will be getting, you are just giving the inflation also along with the coupon rate. It is protecting you against inflation. Government can reduce the coupon rates on its borrowing by way of the inflation index bonds. How? Is this true? Why? Kaise? By way of inflation index bonds, this is your coupon rate. And by controlling the inflation, the government will have a lesser outgo. If the government is successfully controlling inflation, the outflow which it has on the bond, it will be less. The government can reduce the coupon rate on its borrowings by controlling the inflation, as the coupon rate is linked to inflation. They are received not taxable. This is wrong. There should be a reason why the government is going to give you tax benefits. Specific कोई saving instruments, for example, sovereign gold bond hota that the government wants you to shift away from gold. So they'll lure you towards the bond with giving you certain incentives. The government is already giving you an incentive here by protecting you against inflation. Is there any reason for giving this taxable condition also? So the answer is 1 and 2. So you need to just think here. Agar ye one statement is tricky. So if you think over the third statement, any specific reason why they would incentivize that people should invest in these type of bonds? Because tax se to government would lose certain things. कुछ incentive होना चाहिए government को, तभी tax they will give you a tax saving instrument. Answer is 1 and 2. Next is your industrial sector, FDI in e-commerce. Foreign-owned e-commerce firms operating in India, which of the following statement is correct? They can sell their own goods in addition to offering their platforms as marketplaces. The degree to which they can own sellers on their platform is limited. Easy or difficult? This was a tricky question, difficult because this is a regulation of 2017-18. But now, since it's been so long, basics of e-commerce. So there are two models in e-commerce. One is your inventory-based e-commerce, and the other is marketplace. In the inventory model of e-commerce, the company which owns the platform can also sell through its own brand. वो अपनी इन्वेंट्री मेंटेन कर सकती है. फॉर एग्जाम्पल Amazon can maintain its own inventory and sell in the market. In a marketplace models, it's just giving you a marketplace where buyers and sellers meet. They cannot sell their own products. They don't have any control over the inventory. In India, FDI is not allowed in inventory-based models. FDI is only allowed in marketplace. Amazon being a marketplace, in fact, that time it was a very big news because they had owned their own operatives, jiske through they were selling products. WS Retail, Cloudtail, both Flipkart, Amazon were doing it. So marketplace FDI is allowed where they can sell they can offer their platforms for meeting of buyers and sellers. They cannot sell their own goods. This is not allowed in India. So one is not correct. The degree to which they can own big sellers on their platform is limited. Now, how do you know what exactly is inventory? How much, if Amazon is owning certain company, how will you classify it as inventory? So there was a term given in the regulation itself that the vendor, if it is selling up to 25% to the marketplace, it will be allowed. Beyond that, it will not be. So कब classify होगा कि marketplace is controlling inventory through another firm? When that firm A, for example, is controlled by Amazon, how would you know that Amazon is controlling its inventory? When the sales done by A on Amazon to Amazon is up to 25%. So the degree to which they can own the sellers is limited. Answer is 2 only. It was part of regulations if you read e-commerce. Inventory based and market based, it's common. But again, a difficult question because revising 2018 related current affairs is slightly difficult. But this is the second toughest question, like after NEER. Inventory based allowed in India mein. See, this is when I'm talking about FDI. Normal marketplaces are allowed. For example, Big Basket. वो sellers को भी ला सकते हैं, वो खुद की भी inventory रख सकते हैं. Domestic are allowed, foreign are not allowed. Foreign can only provide marketplace, they cannot control. See, the whole problem was that Amazon is offering deep discounts on its website. How? Because it is controlling inventory and it has a lot of money, तो वो कर सकते हैं. So it's distorting your market. It is against the small local producers and local sellers. Recently also, the Confederation of Traders, they complained to the CCI, the Competition Commission, that they are flouting this rule. अभी भी Amazon inventory control कर रहा है. The problem is with this, Amazon will be the largest seller in your market. बाकी जो local sellers होंगे, they'll all be destroyed. So this is a regulation brought by the government कि आप सिर्फ buyer sellers को मिलाने के लिए marketplace provide कर सकते हो. You cannot control the inventory. This was the rationale behind the regulation. Which of the following constitutes real sector in the economy? Recently in 2009-20, they had asked a question on non-financial debt. In In 2020 there was a question, which of the following constitutes the non-financial debt in an economy? यहीं पे why previous year questions are important. So when you read about non-financial debt, so there are, when you read about GDP, there are two sectors broadly, the financial sector and the real sector. Non-financial debt थी real sector की debt. And what are the components of real sector? You have the households, the non-financial corporations, and the non-profits which serve the household. जो भी financial नहीं है वो real sector है. And we read about GDP, the basic circular model. We read about without the financial sector, we just have the firm and the household. Why it is real? Nothing which is not financial. No financial metrics allowed. Real economy can participate without the presence of money. You can have barter economy. Real variables are those where you don't need any representative of money to represent any transaction. This is your real economy. In fact, this 2020 there was a question on financial debt. उसमें एक बैंक की डेट छोड़ के तीनों आंसर था. If you've read non-financial debt, real sector becomes easy. यही है real sector. Farmers harvesting their crops, textile mills converting raw cotton into fabrics. Commercial bank is a part of financial sector. Corporate body issuing rupee denominated bond overseas. Again, financial. Answer is 1 and 2. Basics of economy, when you start reading GDP, there's a differentiation between real and financial. Because if you see real sector households, two households can interact with each other selling goods and services without money. You can give him, say, 5 tables in exchange of, say, 5 pair or 10 pair of shoes. You don't need money. That is real sector. The inclusion of financial sector is coming above the banks and all the financial institutions. So these two dealing with the financial sector, the first two dealing with the real sector. Why previous year questions important? Non-financial debt 2020 was asked. Question number 8. Which one of the following best reflects indirect transfers? Anyone attempted this question? Got this right? So this was an easy question. Covered in news throughout the year. Retrospective taxation. The government had levied capital gains tax on which company? There were 2 companies which were affected by this, and Kane India. So now this year, why it was in news? Because the government has now said that we are going to cancel whatever we have to take from Vodafone and Kane when retrospective taxation was there. Retrospective taxation has been removed. Now what exactly the case was? Cayman Islands, and there was a company called CGP Investments. They were holding 67% shares of Hutch, which was holding the Hutch holdings here. What Vodafone did was, Vodafone bought 67% of this Hutch from CGP Investments. But this value of these shares were drawn from assets which were there in India. ऐसे Vodafone आई इंडिया में. CGP Investments were holding the shares of Hutch. Vodafone bought it from CGP Investments in Cayman Islands. India asked for a capital gains tax on this. That you should give us capital gains tax because your investments draws the value from the assets which were there in India. ये तब मना कर दिया वोडाफोन ने. There was a case. The Pranab Mukherjee was the finance minister. He introduced a law which said that previous held transactions, retrospective, जो पुरानी transactions भी हैं, उस पे आपको capital gains देना पड़ेगा. And that is why it became very infamous that time कि अब taxation, any civil law should have a रेट्रोस्पेक्टिव कि आगे से चलेगा, पीछे वाली ट्रांजैक्शंस पे भी आपको देना पड़ेगा. This was the case. So the term indirect transfer again was in news to explain what has happened here. A foreign company transfer shares, and such shares derive their substantial value from assets located in India. Retrospective taxation was removed this year, so it was in news throughout. I hope this is clear how it happened. Value यहाँ से आ रही थी इंडिया से, इसीलिए मांगा था. पंगा ये हुआ कि retrospectively it was brought in. Otherwise, this is still happening. Abhi, this sort of transaction happens, India will take capital gains. Only the retrospective effect has been removed. पुरानी transaction से नहीं, but अगर अब होगी तो India will take a tax because the value is being driven from Indian assets. This was indirect transfers. Question number 9. With reference to the expenditure made by the organization or a company, which of the following statement is or are correct? Basically, we don't read about financial statements of company, but otherwise, when we read about the fiscal policy of the government, so how do we divide the expenditure and receipts on base of capital and revenue? What is the difference? Capital, it generates an asset or reduces a liability. Revenue is your day-to-day expenditure, which is recurring in nature. जैसे salaries, pensions. You're not creating any asset. कुछ productive capacity नहीं बन रही. Here, you are creating a productive capacity or you're reducing a liability, certain loans or you're giving off. In revenue, it's just to manage your day-to-day expenditures. So acquiring new technology is capital expenditure. Adding an asset, improving your productive capacity. Debt financing is considered capital expenditure, while equity financing is considered revenue expenditure. Why? Why no? Debt is revenue. When you raise money through loans, you get debt financing. क्या है? सिर्फ आप लोन एक ले रहे हो, issuing a bond. Equity financing, you are issuing shares. दोनों से आपको क्या मिल रहा है? How can it be revenue expenditure? Are you doing certain day-to-day? One-time capital मिल रहा है दोनों से. The only difference is debt financing, you're issuing a bond. You're taking a loan. Equity financing, you are issuing a share. Both ways you are getting a one-time capital. For example, equity financing कैसे? For example, disinvestment. When government disinvests, it is getting capital, not a revenue expenditure. So answer is one only. Both are capital. Equity financing अब disinvestment से relate करके कर लेते हैं. You get one-time capital for infusion to make capital expenditure. You issue equity. With reference to Indian economy, consider the following statements. How many of you attempted this? Easy question. Past 1 year I've been repeating in all classes. There's a status on there's a paper every year, a government paper on the debt status of India. 2019, they had asked a question on external debt. Every year in January, this year they had published it in March or April. पूरे साल में इंडिया की डेट प्रोफाइल क्या है? Both internal and external debt, there's a comprehensive analysis, there's a report every year. 2019, there was a question on external debt. That external debt is dominated in what? And similarly, the internal debt, various parametrics. Same thing asked here. First, share of household financial saving goes towards government borrowings. Any doubt in this? Whatever your households are savings, these savings Go to the bank. If you go to the formal financial, we are assuming financial inclusion. This is how savings is turned into investment. This is the whole link, circular flow, savings, investment. So government borrowing is similarly a loan. So a part of financial saving goes towards government borrowing. और कहाँ से पैसा आएगा? Government is borrowing from the market. वो savings ही आ रही हैं लोगों की. वही they are borrowing. Dated securities issued at market-related auctions form a large component of internal debt. The largest component is market borrowings. Government borrows from the market. It issues what? Dated and T-bill. What's the difference? More than a year, less than 1 year. A large component of this is dated. So both are 1 and 2. I'll show you figures also for this. This table is from that report only. Status paper on government debt. Every year, in fact, every quarter they release a report. फिर एक combined report निकालते हैं पूरे साल की. So if you see the internal debt, internal debt has marketable securities, dated, treasury bills and cash management bills. Dated securities, treasury bills and cash management bills. This is for temporary management, liquidity management. See from the figures, dated is approximately 7 lakh crores. This is T-bills, 6 lakhs. This is 71 lakhs crores. If you see from the GDP to percentage of GDP, 36.3% is your dated securities. T-bills is just 3.5%. These are the things which, when we read the status paper, both external and internal debt, these are your parameters. Last year they asked on external debt, 2019. Tight monetary policy of US Federal Reserve could lead to capital flight, right? What does tight monetary policy mean? What is tight monetary policy? Increasing the interest rate. Loose is when you reduce the interest rate, making it easier to make loans. If the US Federal Reserve increases interest rate, what will happen? You will have a outflow. अपनी economy में अगर interest rate है ज़्यादा मिल रहा है तो why would they invest in some other country? They will outflow. It could lead to capital flight. Capital flight may increase the interest cost of firms with external commercial borrowings. Now, what will happen if capital flight happens? If there is an outflow, what will happen? Currency will depreciate or appreciate? What happens if currency depreciate? For example, someone has taken external commercial borrowings, $500 ka he has taken a loan. First, the dollar was rupees 50, it turned into say 60. In the first case, how much he has to repay? 2500. In the second case, he has to repay automatically depreciation से cost of firms will be increasing क्योंकि उनको अब ज़्यादा पैसा देने पड़ेंगे. This is I'm talking about principal, वो interest पे भी ज़्यादा देना पड़ेगा if currency is depreciating. So this is devaluation of currency decreases the currency risk. Depreciation is happening through market forces, devaluation happens through central bank. So if devaluation is happening 50 to 60, is it increasing the currency risk or decreasing? ज़्यादा देना पड़ रहा है किस केस में? Second case, so it is increasing the currency, not decreasing. Answer is 1 and 2. Easy question. Directly based on currency exchange rate management. Question number 63. Even this was an easy question. In India, credit rating agencies are regulated by Reserve Bank of India. The rating agency, popularly known as ICRA, is a public limited company. Brickwork Ratings is an Indian credit rating agency. The sovereign credit ratings of India. पिछले 3 साल से this has been a debate that the credit rating of India has been poor. In 2019-20, the economic survey talked about this in detail that we have good fundamentals, तो हमारी rating improve करो. Even this year, this was in news, the credit rating, the sovereign credit rating, that we wanted to have an upgrade in credit rating because we had strong fundamentals. Based on that questions, credit rating agencies India में RBI. पिछले 3 साल से this has been used. In fact, when Arvind Subramaniam was the chief economic advisor, he has been talking about this, that we need to improve our credit ratings. So related to that question, India में credit rating agencies कौन regulate करता है? It is SEBI. If you know this, you don't have to go for the other 2 statements. Because see, these 2 statements cannot be prepared. You can't run for sources for these 2 statements. और वो पूछी भी इसलिए गई है कि आप एलिमिनेट कर लो फर्स्ट से. Otherwise, knowing what are the different credit rating agencies, this is difficult to prepare. Similarly, if ICRA is a public limited company, they have opened up for equity or not, these things are difficult to know. Because normally also you would not read a newspaper. Because company related information, these type of informations, we generally don't prepare. But who regulates credit rating agencies, this is important. It is SEBI. Answer is 2 and 3. PT 365 सब जगह कवर हुआ है credit rating agencies. Question number 64. Bank Board Bureau. The governor of RBI is the chairman of Bank Board Bureau. It recommends for the selection of heads for public sector banks. It helps the public sector banks in developing strategies and capital raising plans. What is the Bank Board Bureau? It was a stock question, easy question. In fact, this question has been asked in one of the previous years also. 2016-15, a PJ Naik committee was there for improving the governance of banks. It said one of the problems with banking structure is that the ministry is interfering in the public sector banks. So what you can do is, all the public sector banks, they should be taken away, the government holding should be taken away and given to a holding company. बैंक इन्वेस्टमेंट कंपनी, आप गवर्नमेंट से शेयर होल्डिंग एक कंपनी में कर दो which will hold the shares of all the banks so that the ministry doesn't interfere. Until you do this, you have a bank board bureau for the selection of head and also recommending certain growth strategies. This was accepted by the government. The first chief of bank board bureau, वहीं से क्वेश्चन हो जाना था. 2G scam, we don't know हुआ था नहीं हुआ था, but he definitely said. Then he got this position as the chairman of the Bank Board Bureau, and he was nowhere related to the RBI. He was the Comptroller and Auditor General. Recently also, why Bank Board Bureau was in news? Because Bank Board Bureau ka reconstitution the government is thinking about. That we are going to replace it with a new body, or iska kuch composition we are going to change. Recommends for the head of public sector banks and also other financial institutions, for example, insurance companies and all. Helps the public sector banks in developing strategies and capital. But again, if you eliminate one, you get the answer. Economics mein there was a lot of elimination happening. And that is why this is like one of the highest scoring sections. You eliminate one. This is the only section जिसने थोड़ा जगह है कि हाँ हर साल elimination होगी कुछ ना कुछ. Answer is 2 and 3. Eliminate one, governor is not the RBI governor is not the chairman. With reference to convertible bonds, consider the following statements. A lot of questions on capital markets this year. As the name suggests, convertible bonds, either you can take the return you're getting from the bond, or you can convert them into shares. दिस इज द डेफिनेशन ऑफ कन्वर्टेबल बॉन्ड कि अगर आपको बॉन्ड का रिटर्न नहीं चाहिए, यू कैन कन्वर्ट इक्वल इनटू शेयर्स. ऑप्शन टू एक्सचेंज द बॉन्ड फॉर इक्विटी, दे पे अ लोअर रेट ऑफ इंटरेस्ट. ऑटोमेटिकली आपको एक ऑप्शन दे रहे हैं एक नई चीज पे जाने के लिए, विच कैन गिव यू अ हायर रिटर्न. सो व्हाट दे विल ऑफर इज अ लोअर रेट ऑफ इंटरेस्ट. दिस इज द होल आइडिया बिहाइंड अ कन्वर्टेबल बॉन्ड. The option to convert to equity affords the bondholder a degree of indexation to rising consumer prices. Is this correct? So we know that we have an option to convert to equity. ये वहीं से भी you can get it. Indexation होगी कि नहीं? Will this new return be linked to inflation or not? Why? नहीं, वी आर नॉट टॉकिंग बॉन्ड. अगर हम इक्विटी में कन्वर्ट कर लिया, आर वी गेटिंग एन इंडेक्सेशन टू कंज्यूमर प्राइसेस? आर वी प्रोटेक्टेड अगेंस्ट इन्फ्लेशन? वी आर प्रोटेक्टेड बिकॉज द प्राइसेस ऑफ इक्विटी विल बी लिंक्ड टू मार्केट. आप जब कन्वर्ट करोगे ये इक्विटी के मार्केट प्राइसेस ही होंगे. सो इफ देयर हैज बीन हायर इन्फ्लेशन, ये आपकी शेयर के प्राइसेस भी अच्छे मिलेंगे आपको. So there is definitely a protection because when you convert it into equity, these are market linked prices. It's not that the return will be the same जो उस दिन से था, because these equity, the shares are linked to the market price. They are listed. So both 1 and 2 are correct. This is a very basic question because convertible bonds के यही दो features हैं. That it provides you indexation because you are converting equity on that day. And lower rate of interest because you have an option of conversion. In India, which one of the following is responsible for maintaining price stability by controlling inflation? Even if you are not preparing, RBI. In fact, now this responsibility is of the Monetary Policy Committee. But still, this is direct, easy question, RBI. This is the role of RBI, the monetary policy. So these type of questions, labor bureau types, कौन CPI निकालता है कौन सी report कौन सी? These domestic institutions, every year we get 1 or 2 questions on institutions. So which of the following industrial disputes, closure, retrenchments and layoffs in factories employing workers? It is कहाँ मुश्किल था economics. So based on previous trends, focusing on concepts and practicing. See, practicing is important because you know how to link the concepts. And you've seen that one question is having 3-4 multiple concepts, so it needs practice, focus during the exam time. So this is from the economics section. Next is your polity section, wo isse bhi aasan tha. In case you have any doubts related to any economics or prelims or mains, this is my email address. Thank you.